The crypto market has fundamentally changed over the past 24 hours, and I'm going to unpack these changes for you so you can understand the difference going forward in the market for the month of January and beyond. This is a really important time for us to get our strategies together, and this new information, I think, has changed the game in terms of how I'm positioning and how I'm viewing the market over the next few weeks. It's not flip-flopping per se, it's more so taking the new information into account in order to make better investment decisions. So in today's video, we're going to discuss the crypto dip, which has happened, what caused the dip, why I think it has fundamentally changed crypto, at least for this next little period. And then I'm also going to discuss some opportunities at hand and how I'm actually playing the dip at the moment. Is it time to buy? Is it time to de-risk? All that sort of stuff I'm going to run through in today's video. So first off, let's kick off by having a look at the Bitcoin chart. As I discussed in the previous shows, Bitcoin has been in a range between 92,000 and 100K. It does look like the move that was over 100K was a deviation. And that was something that 2 days ago I said I was, a little bit wary of, potentially deviating above 100 unless we have at least a few days where we actually close above 100. But of course, on the 4-hourly, it was only a few candles before we ended up pulling back into the mid-range here, which is $95,000, and we've bounced off that mid-range level. You can draw in the mid-range level here with the horizontal ray, and you can see the level that we've bounced off, which may mean we could see a little bit of relief now. I'm not really in the business of speculating on the super low time frames, as that's not really the domain that I'm trading in, but that is definitely something that can happen considering we're at the mid-range, or we could come down and visit range low, which is between 92K and 94K, depending on how you draw your charts. But that has been the range that we've been chopping in since the midpoint of November. So on Bitcoin, nothing really too alarming here, but definitely a pullback that happened quite suddenly due to a couple of factors, which I'm going to discuss in a minute, and clearly dragged a lot of the altcoin market down with it, with many alts down 10 to 20% today. Many of the majors taking a beating after it was a green open to the new year in general for crypto. What was really interesting about this dip is that typically when you see big liquidation events, it's typically driven by Bitcoin, Ethereum, Solana, but this time over 25% of the liquidations were actually from the others index, which means altcoins excluding the top 10. So there certainly were a lot of mid to large cap altcoins which people were levered up on in the new year. It's almost like people got to the new year, they felt a little bit of short-term optimism. This is typically the Santa rally phase in the market, which we've discussed. They started longing, but then the second there was bad data that came out, which affected the Bitcoin price, which we're going to break down, Bitcoin came back down, and that took a lot of these positions down with it, resulting in a lot of people getting liquidated. Around the $700 million worth of liquidations at the time of recording this video. Now, I must say it does feel like the most important thing in crypto is macro again. It's the reason why the market had this dip, and stocks also had a dip. And it's also, I think, the number one focus over the next few weeks, at least until FOMC, which is on the 21st of January. So I'm going to go through the data that we did get yesterday, but I also wanted to point out that next week is a really, really big week for macro. We have PPI on Tuesday. Next Wednesday, we have the CPI reading, which of course is going to impact the probabilities for the FOMC and future FOMCs going forward. And then we also have the unemployment data and retail sales data next Thursday as well. So it's a really, really big week for macro. Just keep your eye on these dates and expect volatility. Obviously, my initial reaction to that is going to be, look, don't take on crazy leverage this week. Stick mostly to spot. Have some stable coins in case there's volatility. And any positioning that you do, don't do it with a rush. Later in today's video, I'm going to speak about some alts that I actually think look pretty good as buy the dip opportunities. But even those alts, I'm not rushing into because I am cognizant of the fact that there is going to be more volatility on the market, at least over the next couple of weeks. And I think you do have time to position because the market is going to give you opportunities, especially with this focus now shifting back to macro. It is going to cause volatility. And it kind of feels like we're back in 2023 again. Remember that whole year was just macro. Every single CPI, every single FOMC, it was the biggest thing in crypto, right? Because that was what was mostly driving prices. It drove prices down in 2022. There was that whole rate hike argument, which caused a lot of panic in the market. And then it also caused the beginning of the uptrend as rate cuts started to be anticipated in 2023. And then 2024, it was mostly driven by the Bitcoin ETF. So you've seen macro kind of being put on the back burner, but it has come to the forefront again now because Bitcoin has had a big run off the back of the ETFs. It's a new year, so people are searching for macro directionality. And you've also had, I think, the majority of that micro strategy front running now coming into the market. So the market is looking at what's next, which means when you get macro data, the market is going to be more sensitive to that. And of course, it's going to be even more sensitive to that when prices are at all-time highs. So if you look at the stock market, it's pretty much at all-time highs. Bitcoin, it's pretty much just sitting under all-time highs. So anytime you get some bad data, it is going to affect on a relative basis prices a little bit more because we've already come up so much. And that's just the reality of the market right now. So what were the specific reasons behind the dip yesterday? Well, the market started dipping as soon as the ISM index results were announced and the JOLTS job openings were announced as well. These were two data sets which suggested that the US economy was actually a little bit stronger than anticipated. So both data sets came in hotter than anticipated, which caused a bond yield spike on the US 10-year treasuries. And obviously, because risk assets have an inverse correlation to that, we saw the stock market have a dip and also crypto have a dip. And of course, alts are going to have a bigger dip because they are more risk on assets. So it's kind of a weird environment right now because risk assets, so the market wants bad data because bad economic data means the Fed can't keep rates the same or they can't hike rates, right? So if you get bad data, the likelihood of rate cuts, lower interest rates are very good for risk on assets like Bitcoin and equities and is a much better scenario for the market. Whereas when you get strong economic data, it kind of sounds weird, right? Because we should be wanting a strong economy. But if you are in the markets, a strong economy means Powell can be a little bit more hawkish. He could come out in the next FOMC and really toe that hawkish line. It also could mean that the probability of getting one rate cut next year could potentially go to no rate cuts. Who knows? If the data was really, really good, you could even see a rate hike next year. Obviously, that is the bear case for crypto. But that is why good data in the market right now is bad data. And it is kind of weird, as I said, because as people, we should care about the economy being better because that means more jobs, that means more stability. It's actually a good thing if you get a soft landing in a strong economy in general, especially if you're living in these countries like America. I'm not, but you typically want your country to be performing well, right? But if you own any crypto or equities, or if you're heavily invested in risk assets, you kind of want the economy to do badly so they keep cutting rates, and that can act as a short-term catalyst for markets. Obviously, longer term, you're going to have bigger problems like rising inflation, and that's going to potentially lead to the need to hike later. But everyone has a short-term mindset in the market. Everyone's trying to make money now, so that tends to go into the background, even though, I mean, a strong economy is going to mean more sustainable markets for the longer term. But as I said, people are short-sighted, and it does make sense because even to an extent, I'm short-sighted trying to maximize this cycle. So that was the reason. Now, these weren't huge data sets, but they were just a little bit of an indicator as to what we could expect from next week. But obviously, next week's data is very, very important with CPI, retail sales, PPI, and unemployment. But this was just a little bit of an indicator as to what the data could potentially be. And the market reacts in real time to data. So as you get that information, that's when you see a really short sell-off because markets are forward-looking. So they're not just looking at what's going to happen now. They're looking at all the future rate cut probabilities, as you can see in front of you, and that's adjusting in real time. And obviously risk assets are operating on the probabilities in the future. So all of this is very forward looking, but markets obviously reprice in real time, and that's why you do see market moves. And I think this was slightly exaggerated because Trump came out and said inflation's too high and is continuing to rage, which that sentiment is not great, because if you're saying inflation's too high, can you really keep cutting and cutting and cutting, because that could potentially cause more inflation that is stimulating the economy. So that is something as well that I think impacted the market. I think although there was a lot of optimism around the Trump trade, and for good reason, specifically surrounding crypto regulation, now there are some concerns starting to come in about potentially his impact if he implements tariffs. What could that do to the economy? What could that do to inflation? What is his policy going to be? He's in a really tricky position here because he doesn't want markets to crash. He wants to do the best for the market, so he looks good. But at the same time, he can't let these issues like inflation run absolutely rampant during his tenure, or he's going to get backlash for that. And if you want to implement tariffs to potentially boost the local economy, there's going to be knock-on effects in terms of interest rates as well. So he's got a balancing act to play right now, and crypto isn't liking some of the balancing on the more hawkish side that's coming out. But of course, the major thing that we're looking out for in terms of macro, and I'm not a macro expert, I just have a rough read on the market and have researched it and have a basic understanding of economics, but I'm not an expert. There are great guys like Fajao on X, Alex Kruger, these type of guys that I highly recommend you follow. But I think we're all in agreement that the FOMC on the 20/21st of January is going to be very, very big for crypto, and some of the data next week will start to impact how the markets prepare before that. So that is why the market reacted. That is why the market dipped. You saw Bitcoin starting to obviously drop, and then altcoins followed suit. Dominance actually had a bit of a spike. It's now starting to cool down on the bounce, but obviously alts sold off a little bit more because that's typically what happens during dips. They are showing now a little bit of strength on the rebound, which is an encouraging sign. A lot of them actually stopped at their major high time frame levels, like Solana and a few others later in the video. I'm going to talk about how they're at high time frame levels and how that could be an opportunity. But a lot of the alts came back down to their high time frame levels, haven't broken yet. Obviously, some have, but a lot haven't. So I think the market really hangs in the balance. This could be a pretty good opportunity to get in, or if we start to break, this could get a lot worse. And I'm sorry not to give you a concrete answer here as to what I think is going to happen, but the reality is things are relatively in the balance. So I am positioning myself for a slightly longer term view heading into February and March, which I think historically, based on all the seasonality we've been discussing, should be good months, irrespective of the macro. The macro is important, right? But I still think seasonality is going to triumph overall. So I'm still trying to position myself for longer term. So what happens in the next week, whether altcoins go down a little bit more or whether they rebound, it doesn't really matter to me. I have a plan and I'm executing that plan. And part of that plan does involve DCAing into the market. And we're going to discuss later in today's video some of the coins that I've already started to DCA into because I think there's an opportunity. Now, quickly, I want to say, if you have been panicking or really worrying, just look at the data in front of you. This is the top 10 altcoins in the market. So I think you've got, I don't have the coins next to it, but like Chainlink and AVAX and all the top coins, right? There is a trend that we're seeing here. And that is a lot of alts have, yes, retraced 6 days worth of gains, but they're still up on the week. So I'm seeing a lot of panic. A lot of people are saying, oh, it's a bear market again. And you know, on X, everyone reacts and overreacts when something happens. But the reality is we've only really retraced 6 days of price action. Many alts are still up on the week. And you can see this pretty evidently on Bounty Bubbles. If you look at the daily, yes, everything's down. But then if you click on the weekly, everything's green again. So everything's still up for the last 7 days, which only takes us back to the 1st of Jan. So effectively, what this move has done is it's retraced that Santa rally-ish move from the beginning, like that New Year rally, from the beginning of January, not even from Christmas. We're still up since Christmas, but it's retraced about a week's worth of gains, not even in a lot of cases. And some alts are actually still up, especially the strong ones like the AI agents, some of the AI stuff, deep in stuff, RWA stuff, which we're going to talk about later, are still showing relative strength even in the face of this dip. So I'm actually not that worried right now. I don't really get why you would be. Yes, the data has materially changed the outlook on the market for the next couple of weeks. I think that real intense bull case has kind of been stripped away as more pessimism surrounding the macro situation has crept into the market. But remember, we do have that blackout period in February where FOMC doesn't take place until the end of March or mid-March. So there's basically a 2-month period where there'll be no FOMC. And assuming there's no crazy catastrophic things said or moves made during FOMC, I think that could pave the way for a bit of headroom where the market is a little less worried about macro. There's just a bit of de-risking happening right now ahead of FOMC, and I completely understand it, just how there was de-risking prior to the Christmas period after the last set of economic data in December. So it makes complete sense to me. So it's definitely changed the trajectory in the short term, but in the long term, I don't think it's changed the macro outlook on the market from a crypto perspective, not a macro perspective alluding to, economic data and rates. I do think part of the reason, though, why sentiment is so bad right now and why there are a lot of people freaking out is because I do feel like there's a bit of exhaustion, and I've experienced this personally because I've had a lot of normie friends come to me that may have bought crypto in October, November, or December, asking me, look, should I still be holding crypto? Is it a waste of time? Did I get it wrong? And it really just shows the sentiment of retail right now because people expect these overnight gains in crypto. They weren't interested in the market in 2023, where we were here every day making videos. They weren't interested in the market throughout the majority of 2024, where I was here every day making videos. All of a sudden, the market starts to spike a little bit at the end of November. Suddenly, they all come back in. They bid the memes, they bid XRP, they bid the AI stuff. And then a couple of weeks later, as the market's looking a little bit shaky because I can't just go up in a straight line forever, they start to question, oh, have I made the wrong decision? Is this altcoin season even happening? Have I been sold a lie? The reality is, crypto gains aren't instant, and you need a little bit of patience in this space if you want to succeed. But I can't dismiss it because you just have to look at the general sentiment of the market to get a better feel for why price is behaving, and why people are acting like they're acting. And the reality is there are a lot of people that are exhausted right now. Now, I'm tired because I work 12 to 14 hour days every day. But the average person, why are they tired? Well, this tweet, I think, explains it really well. I'm going to read it here because I think it gives you an idea as to why there's a lot of people actually quitting crypto now. And that has added, I think, a little bit to the sell pressure because there's a lot of people just exhausted and they can't even be bothered to wait for our macro thesis to play out. They can't even be bothered to wait to see if they are correct. They may not be, but they don't even want to wait until the end because they just can't bear it anymore. They just don't want to take on the risk. By the way, if you're not willing to experience major drawdowns in crypto, you shouldn't be in crypto. If you're not willing to potentially be wrong, you shouldn't be in crypto because there are no guarantees in this space. And I guess a lot of people have started to capitulate on that idea. Not a lot in terms of the overwhelming majority, but a lot in terms of, aggregate numbers of normies. So I love this tweet here. Avocado Toast. They say, feels like some quiet quitting in crypto. Get the sense that a lot of people have returned from holidays physically, but not mentally with the desire to lock in. By the way, I really think you should be and use some of these dips as opportunities. We'll discuss that later. But anyway, still very quiet, even though people are physically there. In my opinion, likely due to pump fun-ication of the trenches, which made 2024 a tiring year of concentrating and rotating. 100% it was a rotators market, and it has been a bit draining because this cycle's been the most active of any cycle. I think it's really rewarded people, right, that are early to the trends, that have gotten in coins early and traded them. What it hasn't really rewarded so much is longer-term holding, especially of majors. And I talked about this on my Twitter the other day. I think this cycle is very fundamentally different from previous cycles. I don't think majors are going to pull huge gains. I actually don't. I think overall we're in a bull market, and I think overall altcoins in general are going much higher, but due to altcoin dispersion and dilution, you're not going to see every major 5 to 10x like last cycle. You're going to see select altcoins and the hot narratives at select moments in time do huge multiples, then cool off. Kind of like more mini echo bubbles throughout individual sectors rather than one big bubble which just gets bigger. And that's indicative of a much more experienced market because it's more PvP because people are experienced. They're from 2021. More experienced crypto players are actually trading against you right now, which it wasn't like last cycle. It was more PvE. Few people understood the market, and a lot of normies were coming into the market. And also, there's just too much altcoin dispersion. So there's just less, there is liquidity coming in. We spoke about that on yesterday's show. There is net capital inflow, but that inflow is still smaller than the amount of new coins being created, which does mean, as Avocado Toast says here, you have more of a trading environment, which has meant that a lot of people have become jaded. Throw in the fact that we've had the most K-shaped P&L outcome across traders in a long time. On one hand, a good number of people made life-changing money in 2024, hitting one or several big meme or AI runners. For many, the motivation to grind naturally decreases afterwards. On the other hand, most traders, as is always the case, either underperformed or did okay, which might lead to feeling discouraged due to missed opportunities or fumbles, worrying that the cycle is getting mature and time is running out, frustration at seeing others around them make it when they haven't, and simply fatigue from being in the market for a long time. Some observations could be wrong. I don't think he's wrong. I think it's very apt. So the people that did make money are tired because they made a lot of money and now they have to back it up again after a strong year, so naturally going to become complacent. And the people that didn't make money are tired because they haven't been making money and they're seeing everyone else win. So almost both contingents of the market right now have reasons to be exhausted. And then there are just psychos like me who have made money but just want to keep doing it again and again and again because we love it. But I understand we're few and far between. And I know there are a lot of you out there because I see the same people in my Discord every day. I see the same people in my comments every day. So I know there are a few of us crazy people out there, but you got to understand normie psychology as well. And look, when are these normies going to come back and get interested again? Unfortunately, when prices start massively pumping again. But I'm a true believer that if your willingness to research and participate depends solely on price, you're probably not going to succeed in this market, because you actually need to be locked in across all moments of the market, not just from day-to-day bullishness to bearishness or vice versa. You have to be here researching, contributing to the space, learning throughout all phases of the market, because that's the only way you can prepare for the extreme uptrends in the market where you can actually make a lot of money. For example, I was here every day during the bear market making videos. I used to be on Crypto Banter, but here as well is where I ended up transitioning, but nonetheless made videos every day. I was tweeting every single day pretty much. I was researching every single day. I was buying coins. I was trading coins. I was altering my positioning, and it was hard. And I did that throughout 2022, throughout all of 2023, and I was able to really reap the rewards of that labor in 2024 and hopefully again in 2025. But it was a really hard period for me, but I kind of planted the seeds. In terms of my content creation journey, I only had, I think, about 150,000 followers at the beginning of 2022, maybe even halfway through the year. I've grown the majority of my following in a bear market. I haven't even grown my following much this year, maybe only 100K. The majority I grew during 2022 and 2023 because most content creators gave up and there was a bit of a gap in the market because I was there every day providing info and analysis. And I was there for people when a lot of the fair weather traders just left and then came back in 2024. So it's just a lesson to you to always put your head down, always keep working, irrespective of outside conditions, because you do create your own luck. And when your own work ethic aligns with external conditions, that is when you're going to make a lot of money in the space. And you don't know when that's going to be. That's why you always need to try. Now, Doc had an amazing tweet, which I think really sums up the current meta of the market. He says, if you change your mindset from one 4-year cycle into multiple mini risk-on cycles, I think you'd be overall happier and possibly perform better as your expectation/time frame would change. And this is really interesting because a lot of people, probably the majority of you statistically, are in the market to capitalize on the 4-year cycle. And that makes sense. Even I talk a lot about the macro cycle. And that's fine. You can believe in that and trade based on that. That's completely fine. But if you shift your mindset, so it's not shifting what is happening, it's just shifting your mindset into capitalizing on multiple mini risk-on cycles, I actually think you're going to be a better trader. And even I've started to try and do this over the last few weeks. Now, I'm not saying chop in and out of the market willy-nilly, baselessly. Obviously, you still want to remain resolute in your theses and actually execute on them. However, you do need to remain adaptive. And I think by having this mindset shift from the 4-year cycle into the mini bubble, echo bubble theory, this is going to help you, A, improve your risk management substantially, so your entries and exits, because if you do believe in mini cycles, then that means you need to capitalize a lot quicker. You can't afford to wait, and you have to be more precise with your entries and exits. B, it forces you to increase your speed of research, so you can't afford to be sluggish when conditions align and fundamentals align with price action, because you need to act really quick. For example, AI agents, when you saw the signs in terms of price action and mindshare, you had to act quick to position, so that's acting on speed of information. And C, it prevents aimless bag holding. So if you believe in the 4-year cycle, you can kind of get away with holding a bunch of stuff that you don't have a lot of conviction in because, at some point everything's just going to run. But if you believe in more mini cycles, you always want to be concentrating your portfolio into the things with the most relative strength and the best narratives at any given moment. And you're constantly reevaluating your positioning and your thesis, which is going to make you a better trader. So even though you might still believe in the 4-year cycle, shifting your mindset into mini cycles is going to make you a better trader for those 3 reasons. As Hitesh says here, even if we get a full-blown alt season at some point, you could have already wasted over 12 months just waiting for it. In that time, you could have caught many narrative rotations, allowing you to make more money than in the previous cycle. This kind of sums up, and I didn't catch everything amazingly last year and I made mistakes, but generally speaking, I made more money than any other year last year because I was able to catch a lot of these narrative rotations quickly. For example, the AI rotation we were quite early to and able to hit a lot of these gainers straight off the bat. For example, Pinlink, that was one that 6x very quickly. Imperial, I think that was a 6 or a 7x as well. We had obviously Checks and Seeple, RWA. I'm talking from the first time I called them on Discord based on that data. I think it was a 5x mode, 5x. Like all of these really quick gains because we were able to preempt that rotation happening into AI and utility. So if you capitalize on these mini cycles, you can make a lot of money and keep rinsing and repeating. Now, obviously, I didn't sell all of my positions. I'm still holding a lot of those coins, the majority of them for the longer term. But the point still stands. And even if you manage to take 20%, 30%, 40%, 50% of your profits during these bubbles, you're still going to be able to siphon back into stables. I'm sitting around 30% stables right now. So you have dry powder to buy in when there are opportunities like we are getting now. So it does make sense to shift your framework. It doesn't mean become flippant. It doesn't mean chop in and out of the market and change your mind every day. It just means be prepared to trade those cycles and capitalize on new opportunities. And I get a lot of Discord members asking me like, Miles, I want to FOMO into the market right now. Like, what should I buy? Like, I've got 80% stables. What should I buy? And what I sometimes say is, look, you can just buy a bunch of random stuff and hold it until the rest of the cycle, sure. And you might make money. You probably will make money doing that. But I would try and not panic. I'd keep a decent chunk of stables. And maybe when there's an opportunity, when there's a new trade, when the stars align on a thesis, then you have more leeway to go bigger. For example, in the Mars High Club, my Discord community, I post a lot of stuff. And some of that stuff I only find that day, and I take a position based on information. LMT is a great example. That's a trade that I went in with big size, so multiple 6-figure size, because I saw an opportunity. When I found that coin, I realized Oxford guys were behind it. I realized other big creators were following them, and no one was talking about them. I bought spot because I thought that was an opportunity. And I wouldn't have been able to do that if I didn't have stables aside. If I was fully allocated to the market, even more than 80% allocated, I would have potentially, without draining my stablecoin balance, had to take profits on all my other alts just to fund that purchase. And that leads to bad exits on a lot of other alts. Whereas if you hold more stables, when you do find these opportunities, and for someone that's in the market every day, I'm finding them all the time, you can go in with bigger size when the stars align on a trade. And for me, that was a trade that ended up making a lot of money. I think at one point it was up 7 figures. I shared it with my Discord, and a lot of people 3x'd in just a couple of days. So that's an opportunity that you guys got, and I also shared it on the YouTube at a similar value. You guys got that opportunity. It's just one example. And the only way to capitalize on that would be to have stables. But this stuff's going to happen all the time. In 2 days, I could find another amazing underrated play, share it in the Discord. It could 3 to 4x really quickly. And if you were fully allocated to the market, you wouldn't have the leeway to position in that coin. So especially in a market like this, where you have maybe an edge. I mean, I think I have an edge based on my research, based on my information, based on my style. And I do share that edge with you guys in the Discord and also here on the YouTube. If you have an edge, you don't always need to be fully positioned because there's going to be opportunities where you find new stuff and you can trade it. So theoretically, and I don't want to do this because I don't want to have the pressure of missing out or the pressure of just being fully underallocated. But theoretically, right? I could be 100% in stables and probably still make a lot of money this cycle because I'll just keep 100% cash. And then when I see something, I'll go in. And then, I'll slowly take profits as it goes up. And then as I see something else, I'll go in. And then if it goes up, I'll take some profits. And then if I see something else, I'll go in. Now, I don't do that because I'm not 100% stables. I'm more around 30%, which is still quite big, I think, compared to some people. But I'm just saying, theoretically, I could be 100% stables and still make money. Once again, don't fully believe in that strategy, but it's just an example to show you that you don't actually need to be fully positioned all the time. So the people that ask me that in the Discord, this is a message to you. There's no need to FOMO. There is literally no need to FOMO and force positioning for the sake of it. When you force positioning, it's harder to maintain conviction because the market will shake you out like it did yesterday and you'll fumble your position. By the way, if you do want to join the Mars High Club and you're serious about trading and investing this year, come join, link in the description below, and take your game to the next level. You never know when the next big piece of alpha is going to be on the way. It could be tonight, could be tomorrow, could be in a week. I don't know either. I'm researching every day. I've got my team of researchers researching every day. I actually have a call straight after this with one of my researchers. He's found a few projects he wants to run by me. That's what we do every day. Researching just so you can do it as well. Gaming X AI, I think that's an interesting narrative. Some of the DeFi AI use cases right now are really interesting. Decentralized science. Mostly AI applications. That's mostly where I'm still researching because I think that's still got the most upside for this next leg of the cycle. And when I find stuff, I'm going to post it in the Mars High Club in one of my 3 channels. My interesting projects channel, which is for stuff that I've just find interesting. My riskier projects channel, which is stuff I'm positioning in, which is slightly riskier. So low cap stuff. And my general alpha channel, which are bigger trades and bigger directionality thoughts on the market. So now you've got more of an idea as to what I'm doing. Let's talk about what my plan is right now because I have been tweaking my spot positioning a little bit. One thing I'm looking at are the coins that have gone back down to their high time frame levels because you have clear invalidation. So Solana's one of them. If you bid any coin on a high time frame level, on a close on a high time frame like the daily, below that level or the weekly, let's say, you can actually de-risk. So you can have a stop loss basically on spot DCAs, which I like. So Solana's one of them. Hyperliquid's one of them. Technically, it's breaking down now, so I want to see if it can deviate above and reclaim. Once again, these support levels are never just lines because I could just draw the line here, right? And now it's bouncing into that support level. But they're always ranges, so we know that it's not just a line, but it's a range like this. This is a support range. That's generally a better way to look at support, by the way. Just wanted to give you that little tip. But Hyperliquid, high time frame support. Solana, high time frame support. Orderly, high time frame support as well. It's going back down into that range. You can make the argument that the moving average is also a range. This is the money noodle. It's basically a moving average. It's a custom indicator from the Mars High Club. So if I was entering orderly, because it's a longer term play for me that I do like, I think there's a lot coming to like in orderly. It's actually a position that I've been building over the last few weeks, and I shared it in my Discord, and now price is giving that next entry back into the money noodle. If I was entering, I would go below the previous low in terms of a stop, so you can have some leeway to actually pull back into the noodle if that does happen. Set your stop below. For me, my stop would probably be quite big, like 25%, because it's a spot trade. It's not a leverage trade. When you're using leverage, you have to be a lot tighter with your stop losses because if you let it get down to that level that I discussed, that could be a minus 20 to minus 25% drawdown. You can't stomach that on a 5x because you'll get liquidated. Whereas in spot, I can stomach 20%. If I put 100K into a coin and it goes down to 75K, that's fine. That is my leeway, right? But obviously, if you could buy coins at high time frame levels, at least you know when you could potentially cut your losses. So Orderly is one that I've been adding. I really like that one. Now, one that I've started DCAing into again is actually Phantom. Now, I must say, I guess just based on the sentiment, and I haven't been up to date with every single detail, right? The general sentiment is that their migration has been a bit of a mess. They have had issues with the coordination on multiple exchanges. People are very confused on how to migrate. It's always going to be this way with a big migration, but it has resulted in a major sell-off. So if you look at Phantom, it's now coming down to a major support level. Obviously, you've got to migrate your tokens into S. So on the topic of HTF supports, Phantom does make sense between 60 cents and even current levels to slowly DCA into. It's had a massive sell-off. It's been super brutal. Hope you guys took some profits on the way up. If you didn't, I think you even have a chance to add to your position as it reaches this support level. Because look, I still think the tech's strong. I think there's still a lot of really cool apps on Phantom. And I think whenever there's a lot of FUD about something going wrong, like we're seeing now with the migration, FUD typically is an opportunity to buy in if the fundamentals remain the same. And the fundamentals are Sonic is still launched, and I mean, everything that was fundamentally true a month ago is still true now, but it was buy the rumor, sell the news, which, to be honest, I didn't not expect. It's so common in crypto. We always get this. Maybe the sell-off has been more than I expected, and probably the pump. I didn't think it would go to 150, so it went much higher than I thought, and it's dropped much more. So it's just been more volatile. But in terms of the sell-off, that was always going to happen. Buy the rumor, sell the news, and then now you have an opportunity to get in. But this is a slow thing for me, because the majority of these alts, I think, could go down further, especially if Bitcoin, I mean, it's bouncing off mid-range now, but what if it goes down to range low? You're probably going to see another minus 10 to 20% on some alts. So go slow. There's no need to rush. FOMC's in a couple weeks. I doubt we suddenly moon unless CPI, is really in our favor. But assuming it's just what we expect, I think the market will be slow over the next couple of weeks, and I don't expect that pickup until later. And for that reason, I think you have time. Now, Some of the coins where maybe you have slightly less time with, and I'm not saying FOMO in, but just have these on the priority list, are the AI agent coins. Because I think what happens is when the market does recover, let's say it is in February or after Trump's inauguration and FOMC, which are around the same period on the 20th of January, 21st of Jan, I think you're going to see agents recover the fastest because they have exhibited the strongest relative strength for the last 7 days and 30 days prior to the dip. So I think when the market recovers, just based on the law of relative strength, a lot of these are going to recover quicker. And a lot of them are also at major high time frame support levels. So even if you're trading AI16Z on Binance, that's at a major support level that's still cooled off massively from its highs. Virtual as well, starting to dip a bit below now. It depends where you draw your line in once again. Actually, probably better to put it here in with the wick. But generally speaking, this is also coming down to a support level. The less price chart history it has, the less efficacy support levels do have though. So just keep that in mind. But if this is the zone, then you can DCA into that zone and you can have invalidation below. But for me, I think that, and I'm just mentioning a couple of the big ones here. If you want all of my smaller picks for AI agents, I discussed them all in my video 2 days ago. So go watch that. Go onto the channel. It's this top 7 AI agent cryptos. That video will be the one where you can get all of my picks. I won't go through them all again today to bore you if you do watch these shows daily. But the AI agent plays in general, I think, are solid DCAs. And even if you just stick to the majors, I think you'll do well on the bounce because of the fact that they have been exhibiting the most relative strength. And then another set of coins I've been looking at are the coins which have held up well during this dip, because the coins that hold up well, they're giving you signs that on the next pump, they are probably going to outperform. Not always, but it at least shows you what narratives are holding up the best. Now, ignoring all the stable coins, which obviously are down the least in the market, you have RWA, you have the centralized exchange alts, lots of these doing really well at the moment, which is a bit of a sign that there's a centralized exchange narrative. It's mostly utility. SPX is actually showing a lot of relative strength. So generally speaking, it's RWA, it's utility, and to a certain extent, it's AI. But obviously over the past 24 hours, AI is still down a lot because it ran up so much. But on the weekly, it starts to look slightly better for AI. A couple coins that actually really surprised me over the past 24 hours. One was Pinlink. This just ripped. The market was dumping and this just ripped off its support level. So that's amazing because that's one of my holdings in the RWA / DeepIn AI space. So it was good to see. It's helping keep my portfolio together a little bit today on a day where obviously a lot is down. My Solana's down, my LMT's down, a lot of my other positions are down. I think some of my utility bags are slightly down. Chainlink, Check, Cpool, these kind of coins are down. But Pinlink's up, which is great. That's one that obviously has been an amazing call in the Discord. I shared it at 40 cents, as you can see here on the 26th of November. Go back to the 26th of November, and it was 40 cents, ran up a 10x to 450, and is now still sitting at a 4 to 5x. So that's been amazing for MHC members. Edge as well. Edge is another coin that I shared in MHC and I've also spoken about on the show. And this has also performed really well. I called it here at 31 cents. As you can see, this was my Discord post on the 5th of December. Go to the 5th of December. You can see it was at 33 cents, ran up almost a 4x, consolidated. But even though the market dipped today, it had a massive pump. And that's because they announced that they have a big announcement coming on the 10th of Jan. So they say here that for the past decade, we've been building in silence, not anymore. 2025 will be the year that everything changes. So this is one of my holds in the DeepIn space as well. I think DeepIn is a narrative that's going to do quite well. I'm actually going to show you a tweet that I did to give you even more alpha because I feel like giving more alpha. Prime, Neural, Carve, and Aethia. So Aethia is another DeepIn play. I think in terms of a short-term swing trade, that one could do well. And I think Prime, Neural, and Carve as AI / gaming plays, they combine both. I think these are also plays that can have a nice narrative when altcoins do run. So these are the types of things that I think will outperform the market instead of just random majors, L1s, L2s, etc. that just don't really have a strong narrative. So if you want the latest updates of any new coins that I add or trade, come join the Mars High Club, link in the description below. Come be a part of the community and I'll keep you updated on the channel every single day. I'm going to, be back to daily uploads. Maybe one day I need to take a break because it's a bit of an adjustment going from holiday period back into daily uploads, but I do love it. And I was here every day during the bear market, so why wouldn't I be here every day during the bull market as well? Hopefully you have a lovely rest of your day. I'll see you in the next one. Peace out.